Hello trade pros. In today's video, I'm going to share with you how to find out what executive and insider traders of a company that you're following are doing. You could see if they're buying and selling and how many shares. And I'm going to use Moderna and Pfizer as an example and tell you how to use this information as part of an investment strategy. Let's jump right into this video. I'm really excited for this one. You're going to learn a ton. So before we begin, I want to dive deeper into what exactly is an insider. An insider is classified as somebody who has material, non-public information for the company they work. Oftentimes, they're either executives and sit on the board at a C-suite level, or if you own 10% or more stake of an entire company. So if you own 10% or more of the shares, you're automatically classified as an insider by the SEC. So these are people who have inside positions in the companies, who have information that the public doesn't, that will affect the stock price. So how do insiders trade? If you're an insider of a company, you have to fill out a form called Form 4 and file that with the SEC. You are allowed to trade, but you could only make a trade when the material information becomes public. You're not allowed to take positions ahead of that information being known to the masses. So that's a severe restriction for executives because they can't make moves on information that are going to impact the stock in the future before that information comes out and other investors have the same chance to dig through it. So when employees buy stock in the company that they work for, this is an insider transaction. Can insider trading be illegal? Yes, absolutely. Illegal inside trading is when you take a position in the market before the news is made available. The SEC monitors this by following trading volumes and correlating that with news. However, it could still be hard to catch somebody who's an insider that gives information to a friend who does the trade on their behalf. So the SEC is actively monitoring insider trading activity, but doesn't catch all of the people who commit illegal activity. Now, I wouldn't recommend this. When friends of mine say, I have a tip from an inside source, I say, no, thank you. In this industry, we have to do things that are legal and uphold our code of morality. Because if you get caught for insider trading, you could be banned from the investment industry and not be allowed to open a brokerage account. So it's super important we stay on the legal side of things. So how can this information help your investing and trading, you might be wondering? The most important way is there's a free service and a website called insidercow.com. That's right. insidercow.com, like the moo type of cow. Here on this website, you could put your ticker symbol for the company you're researching and find out what insiders are doing, whether they're buying or selling, how many shares and at what price, along with a multitude of other information. This is all available for free and a fantastic resource that everyone should know about. That's insidercow.com. We have no affiliation or ownership interest in this company. We just recommend it to you as a resource to help your investing. This website keeps track of all the SEC filings for insider transactions. So how is this information useful? Let's take a deep dive and look at two companies recently that launched vaccines with a 90% plus efficacy rate and what this could mean based on insider transactions. Let's start out with Pfizer. On Monday, November 9th, Pfizer shares soared pre-market on news that they had a vaccine with BioNTech in joint partnership that was 95% efficacy rate, meaning that it worked 95% of the time. Now that's not up for discussion here, it's a separate video, but assuming this is correct and the markets pop, it's interesting to see that on Tuesday, Pfizer's CEO sells 60% of his holdings of his entire stock and offloads those shares on the public market, almost catching the high tick of the day before the stock sold off. On SEC Form 4, Albert Bourla, the CEO, sold a total of 132,508 shares for a price of $41.94 per share. That's equivalent to $5.6 million of profit taking, nearly on a high tick, very close to the 52-week high for the stock at the time. Now, there's a time lag for the time that you filed this report and it happens, so this could merely be a coincidence. But the fact that he sold 60% of the stock is very indicative of the outlook for the company. As soon as the information became public, Albert sold 60% of his stake. You could see the SEC Form 4 right here. We could throw it on the video to see how it looks and what they fill out. But some might think, well, Albert didn't sell all his holdings. He just wanted to take some profit. It is a generally accepted corporate governance and good practice rule that executives should have holdings in the company. Imagine you invested in a company only to find out the executive has 0 shares. How would that affect your confidence in that leadership and the decision-making ability of that CEO for the future of the company? It would be very discouraging. All right, now let's move on to Moderna, because I think this one's a little bit more troubling. On November 16th, Moderna rallied 16% on vaccine efficacy rules just a few days after Pfizer. Insider Cow shows an accelerating amount of stock selling after the news came out. The most troubling part is that there's been selling in this company from insiders since April. And it's not just the CEO. The CEO, the president, and the chief medical officer have been offloading shares of Moderna since April. It's a very troubling trend to see all the executives dumping their shareholdings. And again, this is all public information that you could find on the website, the number of shares, the sell transaction. Since April, there hasn't been a single purchase of insider shares for Moderna. That is an interesting trend. Here's a snapshot that you probably won't see much in, but on the very first column, you could see the S indicating that these were all sale transactions. Let's throw it up right here. So how do you use this information and what's the bottom line? Executives selling shares in a company generates a loss of confidence by investors. You want to see the leadership team believe in the product and the company as much as you do. If you've put your hard-earned money in these shares, you want to see that the leadership is doing the same. So whenever you see one executive sell shares, it may not mean there's a loss of confidence. Executives have to pay bills as well. They may just want to generate a portion of their stocks into cash to take some profit and fund their other expenses in life. However, if they're selling a large portion of their shares, or if you see multiple executives selling big blocks of shares consecutively, that's a troubling trend. If a lot of people that have information that you don't are making big moves, this smart money is very important to follow. So here's how I suggest you incorporate this into your trading strategy. Number one, look at all of your big stocks on your list and pull them into a short list of what you're gonna research. Number two, head on over to insidercow.com, punch each symbol in, and record whether or not there's been more buying or selling in recent transactions. You could split this by quarterly, annual, weekly, or whatever your investment style is to match the frequency of which you're looking at charts and the time period that you hold stocks for. Another thing I would do is create yourself a spreadsheet and find out when there's a shift of momentum from the buying to selling or selling to buying side. With a little bit of coding help or a little bit of technical know-how, you could even export some of this data through APIs to update the spreadsheet in real time. But this is a massive tool that you should be using in today's day and age. The big money and the smart money moves the markets. And now you could see what the insiders of these big companies are doing, and that could be an input point to your trading strategy and your investing approach. I really hope you've enjoyed this video. When I discovered this tool almost 15 years ago, I was blown away, and it's been helping me follow big companies in my portfolio for a long time. Day trading doesn't impact it as much, but for your investments and long-term holdings, this is an absolute must. If you like this video, please hit the like button and subscribe to our channel. Be sure to hit the notifications bell so you're alerted every time new content comes out. Remember to check us out at TRADEPROacademy.com. We have a lot of courses for your trading development on psychology, stocks, options, and futures. Have a great rest of your day. Thanks for watching. Manage that risk and trade like a trade pro. Goodbye.